Andrew, sort of a very clear point of view on this, which we always appreciate. Why do you think this would be a misguided move by PayPal?
Well, my view on PayPal has been pretty consistent, which is that ultimately the company needs to monetize in the physical world, at least in the U.S. The domestic electronic payments market's a $7 trillion market, and PayPal's slice of that is something less than $600 billion in volume, in our view. And as a consequence, unless the company can monetize off of e-com in store with Venmo, we think its growth is ultimately going to revert toward e-com growth, and that kind of deceleration is not currently priced into the stock. So a move to make another online deal, even in social media, to us just doesn't make a lot of sense long term.
This is why I think your analysis of this is so interesting, because most of us assume you go into e-com, you get higher margins, you get a higher multiple, you get growth. And even our discussion yesterday was around kind of owning e-commerce and that kind of thing, which growth investors would seem to love. When you suggest that instead they should go the opposite way by like a legacy payments processor, you met with kind of groans and eye rolls. Why should they turn the clock back, so to speak?
Well, I mean, I think it's interesting, right, insofar as the company's probably turning the clock back by merging with Pinterest, should that happen. It's reminiscent of the eBay days, where I think the company's growth was circumscribed by being part of a marketplace. This is a little different, but, I think as Mark Twain said, history doesn't always repeat, but it often rhymes. And that's what this feels like to me. For sure, physical world acquiring is a slower growth market, but it's also a much, much bigger TAM. And I think if you bring PayPal's digital solutions into the physical world and couple that with the distribution of a leading merchant acquirer, I think that's potentially a pretty powerful combination globally. And it potentially accelerates monetization of Venmo, which really is the holy grail within PayPal. If you look at how successful Cash App has been for Square, for example, it monetizes by our estimates about 5 times better than Venmo. I think it's emblematic of how important having that physical ecosystem is. And so that's really the crux of our view. Open up the TAM and then use all those great digital assets to accelerate growth of what is a slower growth business.
But if you're PayPal and you see that Pinterest has 450 million users, why not try and get some access to them?
I think, Scott, it's a reasonable question and certainly a point of temptation. I think the issue is that, and I'm not a social media or Pinterest expert, let me just put that out there. But, my first glance at the company's financials shows that monetization is very low. And I think the challenge for PayPal is in boosting that monetization. And on paper, I think it looks terrific. And PayPal is for sure the ubiquitous e-com tender type. And the company's, close to 400 million customers and leading brand and first mover advantage seem to be a really nice complement for Pinterest. And maybe at the margin they are. It's just a heavy lift. And I think it speaks to perhaps management's realization that its growth is moving asymptotic to e-commerce. And as a consequence, the company needs to do something. The question is whether or not this is the right deal, and we're somewhat skeptical in that regard.